Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, please don't mind if the video duration is long, because as I have already said that I will not be able to upload videos next week because I'll be out of station. So please don't mind. So first of all, let's look at the chart of DXY. So when DXY started falling from the resistance zone, we all saw some kind of recovery on the chart of euro dollar. Okay, but again we can see that DXY is trying to go up again. My dear friends, I have already explained in my previous videos that this level is a very strong and probably the last resistance for DXY as of now, and the level is around 103.80 to 104 level. This is the last resistance for the chart of DXY. You can check it out on a weekly chart. Okay, so when market reversed, we saw recovery on the Euro USD, GBP USD pairs, but again we can see that DXY is trying to bounce from the Fibonacci 23.6% retracement level. Okay, this support here is derived from the Fibonacci 23.6%. So as a result, if the up move continues on DXY, again we will see pressure on Euro USD or GBP USD. But in case after the market opening on Monday, okay, if it starts coming down, then the next support for DXY will be 102.30 or 102.40. This is the next support for DXY. So overall, DXY is still very bullish. Okay, as I have already said in my previous video that this is just a correction. Okay, always keep in mind that in an uptrend market, until and unless we have an inverted V pattern, we cannot consider it as a trend reversal. So these are all just corrections. Okay, so now let's look at the chart of Euro USD. So as per our expectation, market went up, okay, and market came down also. So if you have a buy position, yes, if you have an ongoing buy position on Euro USD, and if you have taken a buy position somewhere around here, then I'll say that you can be on the buy position, because this is a very strong support for Euro USD, 1.0470 to 1.0475. This is a very strong support zone for Euro USD, and Euro USD will try its best, give their best shot. Okay, the buyers will give their best shot to hold the level here. Okay, so if you have a buy position somewhere around here, you can be on the buy position, because yes, in the coming week also there is a possibility that market will try to recover. Okay, so if market recovers, you will obviously be making money. But in case DXY breaks the resistance levels and Euro USD starts falling, if Euro USD starts falling, then please exit from the trade, because it's your hard-earned money. Please do not gamble with it. Okay, any analysis can be wrong also. Okay, so for that, for one wrong analysis, for one wrong trade, bad trade, you should not be losing your whole capital. So in this uncertain times, I'll say that swing trading is not a very good idea. If you are planning to take a position for 4 days, 5 days, this is not a very good idea. In this market condition, okay, intraday trading or day trading is the best opportunity. Okay, I feel personally. Okay, so if you have a buy position somewhere around here, be on the trade as long as market is trading above this level. But in case market breaks it, if you see that there is a heavy selling pressure, DXY flying, breaking the weekly resistances and all, then obviously you should be exiting from the buy position. And if you're looking for a fresh entry, then you can take a sell position here as well. If the selling is high enough, if the selling is strong enough, you can take a sell position if you see market breaking the support and going down in the next week. Okay, and if market goes up again, okay, if market goes up again, yesterday we have seen that this level acted as the resistance, 1.0590, 1.0600. yesterday we have seen that this level acted as resistance in the market, and the reason was Fibonacci. Okay, if we draw the Fibonacci levels here, we can see that this was the Fibonacci 23.6% retracement level. So this Fibonacci setup is very much valid and working well right now. So in case, okay, my dear friends, in case market in the next week, see, market has already tested this resistance. So next time there's a possibility also the market will break the resistance. So if market breaks the resistance and starts going up, then the second resistance for the market will be around this level, 1.0650, 1.0660. Around this level you can expect that market will face some selling pressure. If you see market reversing from here, you can take a sell position as well. But as I always say, confirmation is the insurance of traders. So get the confirmation first. If you see shooting star kind of a pattern, any good price rejection or bearish engulfing pattern at the resistance around this level, if you see something like that, you get the confirmation that sellers are present and you can take a sell position somewhere around here. See, next time, see, market has already tested this level once, so next time we are not sure whether market will respecting this or not, because see, this is the Fibonacci 23.6% retracement level, not a very strong level. Okay, so and another possibility is that when market will be around this level, okay, the 50 moving average will also be near to the level. So 50 moving average plus Fibonacci 38.2% retracement level will make this level a good resistance zone, and we can expect some selling. If market reverses, you can take a sell position, and if you already have a buy position, be on the trade as long as market is trading above this level. Simple strategy. And for day trading purpose, if you find market coming down to this level and bouncing, or if market reverses from this level, if you see good price rejection from below, hammer kind of a pattern around the support, for day trading purpose, yes, for day trading purpose you can consider a buy position also. But again, I'll say keep your one eye on DXY, because Euro USD, GBP USD and other USD pairs are extremely volatile, so please be careful. And any good trades setup may fail, so please follow proper risk management. My analysis can be wrong, your analysis can be wrong, but for one bad trade, two bad trades, you should not be losing your hard-earned money. Be a trader, not a gambler. Okay, so these are the trading opportunities or possibilities on the chart of Euro USD. Bye bye, take care.